Your bank made money from you today. You didn't notice. That's the point. In 2024, American banks collectively earned $1.5 trillion in profit, not from corporations, not from Wall Street, from people earning $40,000, $60,000, $80,000 a year, people exactly like you. And here is the part that should make you stop everything. Your bank does not make more money when you get richer. Your bank makes more money when you stay exactly where you are. I'm going to prove that to you right now. 6 mechanisms, all of them legal, all of them in the fine print you signed, all of them running against you right now, whether you think about them or not. By the time this video ends, you will never look at your bank statement the same way again. And I mean that literally. Stay with me, because mechanism 3 is the one that made me genuinely angry. And mechanism 5 is where most Americans lose the most money without ever seeing a single charge on their statement. Think about last month. You went to work, came home tired, paid rent, bought groceries, put gas in your car, and somehow, 2 weeks before your next paycheck, it was gone. Not because you were reckless, not because you made some big mistake, just gone. And you sat there doing the math in your head, feeling like something was wrong with you. Nothing is wrong with you. Patricia is 58 years old, school administrator, Phoenix, Arizona, 31 years of work. She saved consistently, never missed a mortgage payment, never missed a credit card payment. Last year, she retired. Total savings, after 31 years of doing everything right, $89,000. The recommended amount for her age, $420,000. Patricia is not stupid. Patricia is not lazy. Patricia followed every piece of financial advice the system gave her, and the system quietly made sure that advice would never be enough. Nothing is wrong with you. Nothing was wrong with Patricia. What is wrong is the system you are both operating inside. This video is about why. 6 mechanisms. I am going to walk you through every single one. By the end, you will understand why your bank has a fundamental business reason to keep you financially stuck. And at the end of this video, I am going to show you the exact personal system I use every single day to fight back against all 6. I use it every morning. Takes 5 minutes. Most people who try it find a financial leak they never knew existed within the first 10 minutes of opening it. Stay till the end, because what I am about to show you is not taught in any American school, and there is a very specific reason for that. Mechanism 1, the overdraft architecture. You have $47 in your account. Monday morning, coffee, $4. Lunch, $11. A small subscription, $12. Half a tank of gas, $30. Total, spent $57. You are $10 over. Your bank covers it and charges you $35. That is a 350% interest rate on a $10 shortfall. Calculated annually, that rate exceeds 20,000%. But here is where it stops being accidental. Most major American banks, documented in federal lawsuits, process your transactions largest to smallest, not in the order you made them. So the $30 gas purchase clears first. Now every other transaction overdrafts. One honest morning, 4 fees, $140 gone. Think about that. You bought coffee, you bought lunch, and your bank turned that into a $140 penalty. JP Morgan Chase paid $210 million settling lawsuits over this exact practice. They changed the policy, then quietly changed it back. In 2023, $9.8 billion in overdraft fees from people who were already running low. And overdraft fees, as infuriating as they are actually the most visible part of this system. Because mechanism 2 is something happening to almost every American right now, and almost nobody realizes it is costing them money every single day. Mechanism 2, the savings illusion. Your bank savings account, 0.45% interest per year. Current inflation, 3.4% per year. That gap, 2.95%, is the rate at which your savings are losing real value every single year. On $10,000 saved, that is $295 disappearing annually. No fee on your statement, no notification, no warning, just quietly, mathematically gone. Imagine working an extra shift, putting that money carefully into savings, feeling responsible, feeling like you are finally getting ahead, and losing $295 anyway. Not to spending, not to a mistake, to a system that was designed to work exactly this way. Now, here is what your bank does with that same $10,000. They lend it out. Personal loans, 10%. Auto loans, 8%. Credit cards, 24%. They borrow your money at 0.45. They lend it to the world at 24. You are the raw material. Your savings account is the factory floor, and you are receiving almost none of the output. We are halfway through. Mechanism 5 is where most Americans lose the most money. That is coming. But first, I need to show you one moment in American history. One law passed in 1999. That fundamentally changed whose interests your bank was legally required to serve. In 1933, after the Great Depression, America passed the Glass-Steagall Act. Simple logic: banks holding ordinary people's savings cannot gamble with that money on financial markets. This law stood for 66 years. This matters because during those 66 years, your checking account money was legally separated from Wall Street speculation. In 1999, the Gramm-Leach-Bliley Act removed that wall. This matters because suddenly, the bank holding your paycheck was the same institution betting on mortgage-backed securities. 9 years later, 2008, those bets collapsed. This matters because American homeowners lost $6 trillion. 8 million lost their jobs. Banks received $700 billion in bailouts. Not one senior banking executive went to prison, and the same structure that caused all of it remains legally in place today. This is not history. This is the system your paycheck enters every single month. Mechanism 3. The minimum payment engineering. $5,000 credit card balance. 24% interest. Completely standard in America today. Statement arrives. Minimum payment $110. You pay it on time every month. Responsible. Here is what your bank does not put in large print. At minimum payments, 22 years to pay off that balance. $9,400 in interest. You borrowed $5,000. You will return $14,400. Your bank will make almost $3 for every $1 it lent you. By law, this calculation must appear on your statement. Search for it right now on your most recent bill. It is there. Required by the Credit Card Act of 2009, in the smallest legally permissible font, positioned as far from the minimum payment box as the layout allows. They are required to show you. They are not required to make sure you see it. Chunk 10-830 to 845. 3 mechanisms, all passive, all running right now. The next one is the one most Americans never even consider a bank profit system because it is disguised as the American dream. Chunk 11-845 to 10. Mechanism 4. The mortgage front load. $300,000 home, 7% interest. 30-year mortgage. Monthly payment, $1,996. 2. Month 1 breakdown. $1,750 goes to interest. $246 reduces your actual loan. You paid $2,000. You own $246 more of your home. This is amortization, and it is not accidental. It is mathematically structured, so your bank collects the majority of its total interest profit in the first 7 to 10 years, the exact years when you are statistically most likely to move, refinance, or sell. The average American moves every 7 to 8 years, which means most Americans, their entire adult life, stay permanently in the early bank profitable stage of their mortgage. Every new house, every refinance, the clock resets. The bank wins again. You did not buy a $300,000 home. You bought a $618,000 home and called it the American dream. Mechanism 6. The float. Your paycheck hits your account. Before any of your payments go out, Your bank holds that money, sometimes hours, sometimes days. During that time, your bank earns interest on your money, money that is legally yours, that you cannot access, while they use it, small, per person. Multiplied across 40 million accounts, billions of dollars annually from your paycheck. Now, here is what makes all of this specifically an American problem. In Norway, banking fees are capped by law. Savings rates track actual inflation. In Germany, 43% of citizens bank with cooperative institutions owned by their own customers, where profits return to account holders. The average German household carries 60% less consumer debt than the average American. Not because Germans earn more, because their system was legally structured to serve depositors. America had that system. It was called Glass-Steagall, and in 1999, it was removed. So what do you actually do right now? Step 1. Move your savings today. High-yield savings accounts, 4.5 to 5%, 10 times the national average, 0 fees. 10 minutes to open. Step 2. Never carry a credit card balance. Use the card, collect the rewards, pay the complete balance every single month. The moment you carry a balance, mechanism 3 activates against you. Step 3. Audit your fees this week. Last 3 months of statements. Every single fee. Add them up. End quote. End quote. Most Americans find between $200 and $500 annually in charges they had completely stopped noticing. Now here is what I promised you. This is what I personally use every single day. I call it the Real Wealth Tracker. I built it because knowing all 6 mechanisms is not enough. You need a system that makes it impossible to ignore them. The Finance Tracker shows you exactly where every dollar goes. Income, expenses, everything in one place. No more end-of-month surprises. The Weekly Planner connects your financial goals to your actual weekly schedule, because money decisions happen every day, not just on payday. The Task Tracker turns your financial action steps into a simple checklist so nothing falls through the cracks. The Habit Tracker tracks the small daily financial habits that compound into real wealth over time. Every one of the 6 mechanisms I showed you today works best when you are not paying attention. This tool makes sure you are always paying attention. I open it every single morning, 5 minutes. And it has genuinely changed how I see and manage my money. If you want to use the same system, the link is in the description below. I want to leave you with one final thought. People often say the American financial system is broken. It is not broken. A broken system produces unintended results. This system is producing exactly the results it was designed to produce. Wealthy people getting wealthier. Working people staying exactly where they are, generation after generation. The overdraft fees are not a bug. They are a feature. The minimum payment trap is not an oversight. It is an engineering decision. The savings account illusion is not negligence. It is a business model. The system is not broken. It is working perfectly, just not for you. The question is, now that you know, what are you going to do differently? Now you understand exactly how the banking system works against you. But knowing the problem is only half the answer. The other half is having a system that actually works. One that has been proven, not for 5 years, not for 10 years, but for 120 years. 60 million Japanese households are quietly saving 23% of their income every single month, while the average American saves 3.6%. Same planet, same basic human needs. Completely different result. I made a video breaking down exactly how they do it. The system is called Kakeibo. And once you understand how banks drain you and how this Japanese system protects you, the two together change everything. That video is right here. Watch it next. The link is also in the description below.